if you're studying the producer price index and the consumer price index, and you're studying the outputs of those figures, what you'll find out is that the producer price index and the consumer price index share a lot of the same variables. There are some, differences in inputs, but the outputs of these two inflation statistics are largely made up of similar variable lists. Does that make sense? Yesterday, we saw a big pop in the stock market. We saw a nice run up in, the NASDAQ. Tech stuff really killed it yesterday. The question today is, can that follow through occur? See the Japanese stock market down by 0.6%. I've been looking at this a lot more than usual recently just because of the craziness of last week. If you're looking at the Japanese yen continues to stay steady at around 147. The dollar index just slightly lower here, but looks like, guys, it is teetering on the edge of a cliff here. If you get the CPI coming in very light today, meaning cool inflation data, it is very possible that the dollar will take that as its final kind of checklist item to continue the move lower and maybe break that 102 level that we discussed yesterday. So you're saying CPI is likely to be lower than PPI? No, Daniel, I'm saying that a lot of the move that occurred yesterday was the move that was also potentially going to take place in the CPI. You have to kind of think about, like, if PPI and CPI have all these secrets, right? They have the secrets about how the economy is performing. The producer price index leaked a lot of those secrets yesterday. They leaked some cool inflation. That being said, there is still the possibility that the CPI surprises us, and that even though the producer price index, which showed a lot of inflationary stuff, is cooling, it could still occur that the CPI has some variables not included in the producer price index that cause some volatility, right? What if the CPI stays the same as 3.0? Yeah, that's a good question. So let's talk a little bit about expectations here today. So the consumer price index today is expected to come in on a year-over-year basis at 3%, unchanged from the previous one at also 3%. If you get 3.1%, which is highly unlikely but possible, right? This would be Bear City, right? The Bears would love this. They would jump up and down. They would start crying tears of joy, because 3.1 would mean stock market lower, most likely. It would not be fun, right? Can you tell I'm a little biased here? If it comes out at 3%, I think that's just okay for the bulls. We'll take that. If it comes in at 2.9%, people are going to get really annoying on Twitter with their bullishness. That's how I'd break it down. I think that, I'm bullish myself, so I would like to see, when I say bullish, I'm talking about the stock market. I'm bullish on the S&P and the NASDAQ, but today has the potential. I will say this. I just want to get it out of the way. You also had UK inflation that came in cool. The RBNZ, which is the New Zealand central bank, they surprised rate cut. So you're seeing a lot of cooling in the world economy. I wouldn't be surprised if the year over year comes in at 3, or even a slight possibility of a 2.9 surprise. If it comes in at 3.1, then we've gotta be careful, because at 3.1%, now inflation's not necessarily bottoming out. I'm sorry, it's not necessarily continuing to trend lower. Let's take a look at the inflation trend.
This week only, we're doing 30% off our VIP Discord service. Inside the VIP Discord, you get access to real-time trade signals from Trader Nick, Frank, and Ivan, with complete trade details including analysis on the reasoning behind the trades, their entries, exits, and stop losses. Our traders cover a wide variety of assets including gold, oil, and other commodities, Forex trades, option trades, and even stocks too. We have active chat rooms filled with traders from all over the world discussing their trade ideas as well. Plus, you get access to our exclusive strategy guides and VIP webinars for joining. All of this incredible trading content is available right now for 30% off, and it's a one-time purchase. So grab it now on sale using the promo code down below before it's too late.
So, we have seen in the last few months the CPI year over year come down for the last few releases. We were at 3.5% in March. Came down to 3. Today the market would not like to see 3.1 because 3.1% again would show we want to see at this point the market is ready to see. They're very much demanding to see even for stock prices to be where they're at, for inflation to continue to come down. The market is expecting a 3% print. If you get a 2.9, the market's going to cheer. And if you get 3.1, the market's going to probably have a mini attack like it did on NFP day. So we'll see. How does CPI affect NAS and US 30? Massively, because it's all about the Fed. In today's trading world, it is all about the Fed. If you trade NASDAQ, US 30, if you trade gold, if you trade currency pairs, if you trade the dollar, guess what? We all trade the same thing. We all just watch the Fed if you're a fundamentalist. Some people don't, they're not as into fundamentals, that's fine. But you can't deny the Fed is the most powerful force in the short run for traders to focus on. In the long run, I would argue company earnings and just a stable, corporate earnings are the most important factor for stock traders. But for gold traders, for currency traders, central bank activity, which is based on the economies of the world, that is your bread and butter. What do you see on gold, Nick? Okay, I'll give you my take on gold. Here's my thoughts on gold. I think gold is... I'm not saying that there can't be a big drop on gold, because it could happen. But let me tell you this. My bias on gold right now is a bullish in no matter what scenario. Now, the price action might not be bullish no matter what. Don't hear me wrong. I'm not telling you, oh, it's certainly going to go up. That's not what I'm saying. If inflation goes up, if inflation goes up, if we have a 3.1% print, gold is going to probably snap lower in the short run because people are going to rule out interest rates and people are going to sell gold because they want to see the dollar weaker. The dollar would strengthen on a hot CPI print, right? So in the short run, I would say gold would probably snap lower, but then you'd have concerns about the economy is slowing and inflation is high. Stagflation leads to gold going much higher because people freak out about the economy. They don't know where to put their money. Gold is, over the longer term is a good inflation hedge. Over the short run, it's a terrible inflation hedge, right? But so inflation hot, CPI hot, I think gold goes down. Then I buy the dip if I can find a setup. If CPI is cool, meaning lower than expected, I think gold just goes up. So I am bullish on gold in either scenario right now, but please understand the difference. I'm not saying that price action will only go up from here. I'm not saying that at all. I'm saying that if you get hot inflation this morning, CPI coming in higher than expected, 3.1%, it's unlikely, but it's possible. If it happens, gold, in my view, would probably move lower in the short run. And then my view would be looking for pullbacks to actually buy that dip. If CPI comes in cool, I think it's just, okay, we probably take out the highs for gold. All right, CPI coming in here. Dollar index is slightly lower. Gold slightly higher. S&P flat, basically. Slightly lower here. Nas about flat. Let's have a look here, see what we got. You'll see the reaction before you even see the numbers on Forex Factory. 2.9. Okay. Look at that, guys. We got 2.9%. There you go. And in my view, here's what's going to throw everybody off today. Okay. Calling this right now. The stock market is not going to massively crash on this number. But even though this number is better than expected for the stock market story, my expectation is not a ton of upside. Why? That's great news for the stock market, Nick. Well, because PPI pulled a lot of that data forward, right? The excitement was out of the bag yesterday. So my best guess, and that's all you can do in markets, is that for those of you who are like me and you're staring at the stock market this morning, we got most of the move yesterday. PPI already told us most of this data. 2.9% is a beat. That's great news. But is that going to lead to a 5% update on the S&P 500? I don't think so. I think we are going to see, hopefully I'm wrong because I'm long, but I think we probably see, upside, but not massive upside because we pulled a lot of that excitement forward yesterday. And I got to say, I don't want to, there's no such thing as jinxing this. The market doesn't care what I say. Last time we had a cool CPI print, the market moved up and then dropped, right? So even though it was a good data point last time around, I believe that was, it was July at some point. I remember distinctly data come out. It was great news and the market dropped on it, right? Sometimes the market can get ahead of its skis. And so that's the question. Are we ahead of our skis? We've had several days in a row of upside, but a 2.9% inflation read, regardless of price action, this gets a check mark from me. I am still bullish, staying bullish. I think the Fed, I've said it many times, maybe I'm right, maybe I'm wrong, but I think the Fed can thread the needle. I think that they can achieve some semblance of a soft landing, meaning cutting interest rates, keeping growth going okay.
I completely agree with Nick in terms of it was kind of, expected. We saw PMI come out yesterday, so it wasn't necessarily a huge shock. Having said that, the dollar is actually doing okay. So it is up on, let's see, not up on the day, actually, that was the wrong chart. But it's still respecting our overall trend to the upside. So in my view, I need to see where the dollar is going from here. I'm not looking to try and forecast this. It's more a case of just waiting, sitting on my hands. Obviously, we do have, more than likely, we have Fed cuts coming next month, which will potentially break this trend line if it doesn't happen sooner than that. So that's basically the main watch I have at the moment in terms of the dollar. Hi, James. Do you think gold will pull back before rate cut to break later? I'm not sure. Let's have a look at gold. Let's see. Just sort the camera out there. There we go. So yesterday I was talking about the 2500 level and saying this was a target of mine in the short term. And to be honest, I was expecting it to potentially get hit today with CPI, which clearly hasn't happened, not even close. So I am on the side of yes, I do think gold will pull back, but I'm not convicted on that. I'm not certain enough to place any trades. And the only reason I am thinking that we may pull back is if we look when we formed the previous all-time high, we saw a pullback. Again, formed all new all-time highs, we had a pullback. And it's happened the past 3 times we've come up to this level up here. We've had these pullbacks. Now, gold hasn't created a new all-time high. It's just missed. So that's a small factor. But we also need to account for profit taking. So in my view, what's happened is we've obviously created all-time highs here. We've pulled back a lot of profit taking here. Same situation here. People are buying at these lows, at this sort of support level that we've got down here. And then they're cashing out back up this resistance. We've got a triple top here. So it wouldn't surprise me if we do see gold have a little dip, although to where, I don't know. Let's see the daily. So I suppose we are sort of trending to the upside slightly here. So I guess my target, if I was to short, would be somewhere around this box here, so around 2400. And that's just following the previous lows. Obviously we are creating higher lows, but we're trapped at this resistance. So we'll see, but I am bullish on gold. If we look at all of the global factors, we've got elections, we've got the Middle East, we've even got Russia, Ukraine starting to get a little bit more interest now as well. So I think there's more reasons for gold to be bullish than bearish. Zen, I'm glad you found it helpful. You're the first person to say that, so I appreciate that. Emmett, hello James, hello Emmett. Emiant, sorry. Can I do oil? Yes, actually, it's interesting you mentioned oil. I took a live trade on oil yesterday when I was on this stream. Where is it? Here. So I took this trade live, and I didn't say it at the time because I didn't want people to really copy this, but this was a hedge for some of the other trades I'm in. So you can see I'm in the dollar Mexican peso, and I'm in silver, both shorts. So this was more of just an inflation hedge, or just a hedge for those two positions in case, news came out as a shock. At least I was positioned in a way where I could minimize losses from either position. Although this one's was moving quite nicely. We peaked at just over 1% profit on this one. Although obviously since news has come out, we have seen a bit of a move back, but I moved this position to risk-free just before CPI, so I don't really care what happens, to be honest here. It's not a trade I'm expecting to take profit. I think that oil actually has some room to the upside in the long term, and the hourly trend is bullish as well. But yeah, at the time the H4 looked really nice. We could just broken out of the 200 moving average. The RSI was overbought. We had a little consolidation followed by a bearish engulfing candle. So just for a short-term trade, and again, just to offset some potential losses from other positions, it made sense to just take a little go at this one. So I'm still in oil. However, in terms of placing a trade now, wouldn't be really looking to, because we've got the 4 hour that's bearish. We've just rejected this 200 moving average on the daily as well, which, if you don't know, or anyone that doesn't know, the moving averages are essentially dynamic support and resistance. So oftentimes on higher time frames, so the daily and the weekly, you'll see the 200 moving average get used as a level of support or resistance, which you can see here has been rejected quite nicely, and the current daily candle has rejected it as well. So just for now, I'd sit on my hands. I wouldn't be looking to open anything new on oil, but as I'm already in this position, I'm happy to let it run. I am GJ long from 188, and it's just ranging. What should one do in this situation? Let's have a look. Well, I'm very much a person that will place a trade and let it go. I don't really... Actually, let me just draw this up before I talk too much. Let's see. So you were at 188. Interesting. Okay. So I assume you just entered. So yeah, the way I see trades is if you place it for a reason. So let's say you've got, I don't know, 3 or 4 factors to back this trade up, whether it's technicals or economics, it doesn't matter. Whatever the reason is you place the trade, if they're still valid, there's no reason to then start playing around and micromanaging and closing out and having emotions, because nothing's changed. All that's changed is you executed on what you wanted to execute on, or what signaled you into the trade. So my point is, yeah, if you've taken this trade just now because you saw, your edge come into play or whatever it was for some reason, and that's still there, why worry? Just let the trade run. In terms of my personal view on the yen, let me pull this up for you so you can see it. Where are we at here? So these are all the notes I've made yesterday and on Sunday. So we've got the USD JPY. Obviously, this is more tailored to the dollar yen, but it can be applied to the pound yen as well. The stabilizing as positional unwind nears completion. So if you look at, in fact, I don't know if the COT report's out yet. I think it might be Thursday that the retail traders get the COT data. However, it looks like 90% of the carry trade unwind is completed, although that's basically just based on the COT data. It's not something we can nail on the head, unfortunately. Cyclical hedges may sell into USD JPY rallies, but structural outflows from Japan likely to continue, maintaining a bearish view on the yen. The expectation for dollar yen to reach 155 by year end due to carry trades and structural Japanese outflows. But yeah, overall, I'm bearish on the yen, bullish on yen assets, yen pairs. So I'm still long on my dollar yen position, and I'm still long on my Australian dollar yen position. Now the Australian dollar yen is actually recovering a lot better. Just because we have seen some nice strength come into the Australian dollar compared to the US dollar. But yeah, I think if you are in yen long positions and you're feeling a little bit uncertain, that's completely understandable. The yen is a bit of a scary one to be in, especially if it's a dollar yen. But again, it's one of those things. If you took the trade for a reason, you need to trust yourself and you need to trust your analysis, especially if you've got the data to back up profitability. Hey James, hope you are doing well. Any views on dollar Swiss? For sure. So dollar Swiss, I am bearish actually. Let's see. So we did see, of course, we had a very intense market over the past week or so, which caused lots of safe havens to start rallying. So we had the yen and the Swiss doing their job. They gained significant strength. It was lots of mainly due to a lot of outflow from carry trades and into other opposite positions, essentially giving the Swiss and the yen some strength. So what I think is we will see this sort of correction that we've had, which is just a sort of natural pullback. The RSI was oversold, it was too extended. Now, just because it's the dollar Swiss, I do stand more on a bearish side rather than a bullish stance. Now, again, I'm just going to pull this up. I don't want to bore you guys too much, but this has got all the information in for me to be able to provide you with some real value rather than just technicals. So the Swiss franc remains overbought with limited potential for further appreciation. The Swiss National Bank is likely to intervene to prevent significant Swiss strength. Short positions in Swiss are attractive if there is a bounce in risk sentiment. Safe havens and status trade recommendations. Swiss is identified as a safe haven currency with strong correlations to the Japanese yen. Recommendations include potential mean reversion trades for Swiss. So I've just realized reading that I got mixed up. I was talking about the dollar CAD, not the dollar Swiss. So dollar Swiss actually is more of a long trade. So sorry about that. Yeah, ignore everything I previously said. I was thinking of dollar CAD, not dollar Swiss. So yeah, it would make sense if we do see a correction to the upside, obviously to sort of offset a lot of the selling pressure we did see during the risk off market.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.